if you look at the sine curve, old octopus, GDP now, because the government, sneaky little government, Obama's government actually had a lower GDP number than at the low of the cycle because they just restated US GDP just by a little bit. So the low of the cycle last year was 1.2% GDP growth, 1.2%. That was under the big O, that was Q2 of 16. So in Q2 of 2016, the big O saw GDP slow to 1.2%. And in some of the states that Trump won, they were in recession, so they were obviously below 1.2%. Subsequently, the big O is gone, and we're up at 2.1%. Now, this, of course, has nothing to do, would never have anything to do with the big O leaving or the Trump, whatever the hell that is going on. But this to this is an acceleration. And again, our forecast is for that to continue higher throughout the year. So again, Josephine, if you could show slide 11 in the current macro deck, she's on it this morning. Look, this is what you got to get right. So let's just do this one more time. And again, thank you to all of you that are new subscribing. When GDP went from I'm going to draw this in just to be consistent. The color matters, not me. 3.3%, that was the peak in Q1 of 15. So GDP, when it slowed from here to here, that's called bad. And when it goes from here to here, and it's going to go higher, that's called good. Not much more complicated than that. There are a lot of very thoughtful people who have had this wrong, by the way. I just tweeted my friend Jeff Gundlach. They were saying he was buying puts last week. Somebody interviewed him and said, look, he's buying puts on the S&P 500. I mean, you can go back and look at what Jeff's been doing since the end of last year. He's been evidently buying puts. I mean, maybe he didn't buy puts. He shorted the S&P. It was overvalued. It's done. He's a very thoughtful guy, and he's got this dead wrong on the stock market. So if you think he could be wrong, just think about all the other people that are far less impressive than Jeff Gundlach. So again, they failed to acknowledge that GDP bottomed and accelerated in as much as profits have. And that's a big part of what's going on out there right now. I don't know if we have an update ready for you visually on earnings, but earnings season's been fantastic. I mean, it's just been awesome. I mean, up 10.6% earnings growth, 289 out of 500 companies have reported. You can see that right at the top, okay? 289 to 500. You can see that out of 500. If you want to do the spicier stuff, the stuff that doesn't give you gas, 53 out of 102 companies in the NASDAQ have reported an aggregate year-over-year earnings growth rate of 13.9%. So, and again, I'm not picking on Jeff this morning. I'm just calling him out a little bit. If Jeff would have said, hey, look, I think this year GDP accelerates from 1.2% towards 3%, and profits in the NASDAQ are going to be at 14 to 18%, and I'm going to short the stock market, then I would have had a lot more to say about that. He didn't say that. That's the point. The people that missed it got profits and, again, the cycle wrong. So, again, that's important to call out in as much as I would be called out if I had a hair at a place.